Hello, everyone. Let's have a look how we calculate the dividend income for the Personal Tax Financial Act 2021. In this example, we'll see how the income will be split based on the different tax rate and based on the different band of the income. So the question is very simple. It says D has net income 165. So the net income is 165. And 120,000 is the non-savings, 20,000 is the savings, and 25,000 is the dividend income. Now, the first thing we have to identify the band. Now, all of us, we know, like we have a three band. We have a basic band, we have a higher rate band, and we have additional rate band. It's very important to identify the tax band. So if we try to split the tax band here, the first one is said basic band or basic rate band. On the basic rate band, we know if the income is up to 37,500 up to 37,700, then the tax rate is 20%. So the basic rate band, our tax rate is 20%. If we are in higher rate band, and then our tax rate is 40%, and it is starting from 37,700 to 150,000. So my income between this threshold, then I have to pay 40%. So for the first 37,700, I'll pay 20%. And from 37,700 to 150,000, I'll pay 40%. And if it is more than 150,000 income, this is additional rate band. And this one we know that's 45%. If it is more than 150,000. But the treatment is a little bit different for the dividend. So if it is a dividend, if I'm a basic rate taxpayer for the dividend, if I'm basic rate taxpayer, so it will be 7.5%. If I am high rate taxpayer, then the dividend rate will be 32.5%. And if I'm additional rate taxpayer, then it will be 38.1%. Now, if you go a little bit up, there is some explanation for that. So basic, higher, and additional. But the first thing we need to understand here, always separate the savings, non-savings, and the dividend. The reason is every single band can have a different sort of allowance. For example, for the non-savings, we know we don't have any allowance, but for the savings, we have an allowance. If someone is a basic rate taxpayer, if someone is a high rate taxpayer, we can have a allowance, so we need to always calculate that. The next thing, we need to look at the dividend. Very important, and to remember, regardless how much is your income, we always have to split the income on the band. Now, if you look at our non-savings income is 120,000. The reason is split between non-saving, saving, and the dividend, because every single income have a different sort of criteria. Non-saving income represent our employment income, for example, our property income, any profit or something from the trading. Savings income represent our interest income, and dividend income because of the profit I'm getting from the shareholding, that's dividend income. Now, if you look at this question, They said our non-saving income 120,000. So with the non-saving, I have to cover 120,000. So if we added this two, it should be 120,000. Now this 120,000 is split in two categories, 37,700 and the balance of 120. This is 82,300. So you always keep 37,700 first, and the remaining balance we write here, because the first 37,700 is 20%, because this comes under the basic rate band. We know up to 37,700 we always pay 20% tax. And from 37,700 to 150, we have a higher rate, that is 40%. Now, if we have added this to, it comes 120. That means my higher rate taxpayer will get as a higher rate taxpayer or additional rate taxpayer, there's a different band as we said. So from 120, still I have some space or some threshold left up to the higher rate band. So from 120 to 150, I have a 30,000 still left here, because first 37,700 is the basic rate. We know that 20%, so we calculate that. And the difference between 37,700 and minus 120, because 120 is my non-saving, so 82,300. So if I cover the whole non-saving, so we can have only 120,000. But from 120 and 150, from the basic to the higher rate, still we have 30,000 left. Now this 30,000 will move to the next category of the income. So you can see the next category, you have savings income. This is 20,000. So the 20,000, I still take 40%, because still I'm on the higher band. Still I'm not covering 150. I have still some left balance from the 150. So I take 20. So from 30, if I take 20, so still I have 10 left for the higher rate. The higher rate, then my non-savings is done 120. Then my savings is done 20. So this total gives me 140. That means still I have 10,000 for the higher rate, because higher rate is up to 150,000. Now this 10,000 I have left for the higher rate band. The next income I have dividend 25,000. Remember that dividend is 2,000 free regardless any income. If my income is million as a dividend income, or if my income is only 2,000, the first 2,000 is always free. Regardless how much is my income, the first 2,000 dividend is always free. So my dividend income is 25,000. So I need to make sure I have 25,000 here. If I added all of this, it should be 25,000. So from 25,000, the first 2,000 is free. Then I have 23,000 left. Now, from this 10,000, I have a higher rate, if you remember. So from higher rate, 2,000, I took zero rate. So it is minus. So I have 8,000 left. That is for the higher rate. So this 8,000 higher rate for the dividend, if you remember, our dividend rate for the higher is 32.5%. So we said 8,000, 32.5%. So 8,000 we take for the 32.5. So my higher rate is finished now. So no more higher rate left. This 10,000 was left because 120 plus 20 is 140. 10,000 was left up to 150,000 is the higher rate. So my higher rate is now done. Anything income I have more than 150, that will go to the additional rate. Now my dividend income is not covered yet. I have only 10. 2 is for the 0 and 8 is for the higher. Still I have 15 left. This 15 will move to the additional rate. And we know the additional rate is 38.1%. So the balance of the dividend income, 15,000, will be multiplied by 38.1%. That is 25 minus 20 and 8. And that will give us the figure. So regardless how much is my income, the income always has to follow the tax band. So you need to split the tax band. So here, non-saving, how much cover? First 37,700, always start with that figure and find how much is the remaining from the non-saving. So the difference will be here with the higher rate 40%. look at how much is the saving and dividend and see how much is the threshold left from 37 to 150, because here we have to find the higher rate. And anything more than 150, then go for the additional. So you need to always keep adding, like a non-saving, saving, how much are left for the dividend. And this rate have to be multiplied based on how much threshold left from each band. So that's how we need to calculate all this income tax. The dividend treatment is a little bit different because the rate for the dividend is different. For the basic rate is 7.5, for the higher rate 32.5, and for the additional is 38.5. Hopefully you understand that.